Started with 2000 rupees SIP, you retired at 39 with 5 crores. Today, what is that money?
Today, portfolio of mine would be in the range of 10 CR.
Oh wait, in 3 years you've doubled that money.
Yeah.
Can you give us a step-by-step framework on how do you actually approach investing?
First, 3 questions you have to answer. Why do you need the money? When do you need the money? How much money do you need? If you look at which index has performed the best over the last 20 years, Nifty 500 has never topped the chart. So what has topped the chart? Majority of the times, your momentum fund and are the toppers.
Do you own a house today?
No.
You don't own a house?
Yeah, I listened to Sharan one day, so I decided not to invest.
Funny thing is that you've been in real estate your whole life and didn't buy a house.
वो क्या ना हलवाई अपने मिठाई खुद नहीं खाता.
How have you actually attained retirement at the age of 39? Sanjay Kathuria, you are the man who made SWP famous, systematic withdrawal plan. You started your content creation journey 2 years back.
Yeah.
And from then to today, you've hit almost 2 million followers on social media.
Right.
The purpose of today's episode for me is to understand who is this man, Sanjay Kathuria? How have you actually attained retirement at the age of 39? What is your current investment strategy for 2026? So we'll go deep dive into your portfolio, your asset allocation. So let's start with a quick intro of who you are,
So for me, I'm a typical middle class person. My father used to work with ONGC. It's a government company. And I did my education. My entire education was in Mumbai. Then I got a job in a real estate company called Raheja Universal. So that's how my career started. Very early on in 2006, once I finished my engineering, my father opened my PPF account. I got my demat account opened. I started investing in shares. Rather never investing, but trading, because I wanted to make a quick money, like every 22-year-old. But then slowly I realized, and when I started my SIP, it was 2008 January, which was the worst time because after that, the markets crashed, the global financial crisis. And luckily, we didn't have these apps which could show us our value of investments every moment. So we used to have physical account statements which used to come to our house. And I didn't check them for 5 years. But continuously, my SIP was just crediting. After 5 years, somehow I just opened them, but almost my investment value had doubled. So I said, wow, yaar, kuch kiya nahi, didn't do anything, and here I am sitting on 2x the value of my investments. And there on the shares, I'm buying, selling, putting all the headache, talking to people, taking some tips.
Yeah.
And I never made money there, meaningful money, never made any meaningful money. So from that day onwards, somewhere around 2013-14, I decided that now I'll only invest in mutual funds. And that's how my serious investment in mutual funds started. Again, made a lot of such mistakes, listened to people, shifted funds, looked at the top funds, performing funds. A lot of that burden which I carry today also. But yes, that discipline of investing rigorously and on a monthly basis was what got me to financial freedom at the age of 39. So a very, very long-term investment routine, very disciplined. And
you achieved this with salaried income only?
Absolutely. There was salaried, and I used to teach, so I used to get some extra income.
Okay.
But yeah, majorly it was salary.
So tell me, what was your first salary when you started working?
My first salary in 2008 was 35,000 rupees a month.
This was 2008?
Yeah, 35,000.
What was your first SIP that you started?
My first SIP was 2,000 rupees.
2,000 rupees?
2,000 rupees SIP.
So at that age, what was your age at that point of time?
2008, 24. 23, 24.
24.
Yeah.
So 24 to 39 is 15 years.
15 years, yeah.
So in 15 years, you retired from the time you started.
Yes.
Started with 2,000 rupees SIP.
Yes.
15 years later, you have retired.
5. At the time of retirement, I had 5 crores in my mutual fund portfolio.
What did you do again? What is your job?
I used to be into strategy. So real estate companies, we used to acquire land. And we used to see the feasibility of that land. We used to get the land financed by private equity players. And I used to also act as the chief of staff to the owner of the company.
So you worked in this one company only for 15 years?
No, I worked almost 5 to 6 jobs. 6 jobs, I think, yeah.
So tell me all your salaries. First job was, how much you said?
35,000 a month.
Second job?
35,000 a month, and within 6 months, my salary was jacked up to 55,000 a month.
Wow.
Due to good performance. Then I got my next job was somewhere around 1 lakh rupees a month. After that, the next was within a year and a half was 1,40,000 a month.
Okay.
Then I moved to 22 lakhs a year, which is give or take 2 lakhs a month, which is again 1.5 to 2 years. Then I shifted from Bombay to Delhi because I got an assignment. So I didn't want to shift. So the guy said that I want you to be in my team. I said, okay, I want 40 lakh rupees. मेरे को पता था देगा नहीं. उसने दे दिया. So I said, now I can shift because he's ready to give me 2 times my salary.
Right.
So that was a very lucky break for me when I shifted my base of salary from 22 lakhs to 40 lakhs.
And how old were you that time?
I was 28.
20,
Sorry, 29.
29.
29. When I
You
got
were
to
at 40 LPA.
40 LPA, yeah.
This job was what?
Again, real estate.
Real estate.
I was in a real estate company.
And uske baad?
Uske baad, this kept on increasing like 10% every year, 45, 50. Then I shifted for a assignment abroad, Sri Lanka. That time my salary post-tax went to 6 lakh rupees a month. Then when I came back to India, I got the RONR status, which is like between the NRI and the non-NRI status.
Okay.
So that gives you a bit of advantage for 1 year or 2 years. So
Okay.
wo fayda liya maine. And then after that, I got to a salary of somewhere around, in India, I got a salary of 9 lakh rupees a month. So when I finally left my job, I was at almost 1.1, 1.2 crores in salary.
So, okay. So you retired at 39 with 5 crores in your bank account. Today, what is that money?
Today, if I look at this entire portfolio of mine, would be in the range of 10 CR.
10 CR. And how old are you today?
I'll turn 42 this year.
42.
Yeah.
Oh, wait. In 3 years, you've doubled that money.
Yeah. So basically, we added a lot of ETFs, moved money from my mutual fund account to ETFs.
Interesting.
And changed my investment strategy a bit.
So now, Sanjay, let's get to the actual, the tactics of investing, the strategies that you employ. So let's start with the first question. Can you give us a step-by-step framework on how do you actually approach investing? Because you are an active investor. You are not someone who is investing and, 10 saal ke baad dekhte hain. You have some mental models in your head,
right,
on how do you sort of adjust your portfolio, right? So can you give us that kind of a framework in terms of how you manage and look at your money?
See, if you look at investing, I always say investing has to be goal-based. So look at what your goal is. So goal is first 3 questions you have to answer. Why do you need the money? When do you need the money? And how much money do you need? So if you are able to first answer these 3 questions, that's the starting point of your journey. It's like saying ki I open my Google Maps and I tell it I want to go somewhere. It cannot give you a route if you say that I want to go somewhere. You have to put the destination and then it gives you 2-3 alternative routes. So that is your first part. And I always say that when your goal duration is lesser, invest more money in debt. And when your goal duration is longer, invest more money in equity. That's very, very important.
Have you ever said, bro, one day I'll start something of my own? Because most people don't fail at ideas. They just never start. Not because they're lazy, but because starting feels complicated. And honestly, I've been there too while starting the 1% Club. I thought I needed to know how to code, have a big team, a big budget, and that mindset kept pushing my one day further away. But the moment I stopped waiting to feel ready and I just started, everything changed. And honestly, starting becomes a lot easier when your tools don't slow you down. That's where Hostinger comes in. It's basically an all-in-one platform where you can launch your website, store, or portfolio without any tech skills. And the best part, it's actually affordable. You get premium level performance with services starting at less than 100 rupees per month. It makes a perfect fit for creators, small businesses, or anyone just starting out. From vibe coding website and web apps to hosting and scaling AI agents on VPS, Hostinger automates it all. So instead of overthinking, you can actually just start. No friction, no crazy cost, just your ideas going live. So if you've been sitting on something, this is your sign to turn one day into day one. Check out Hostinger using the link in the description. Use my code FINSHARAN to get 20% off on purchase of 12-month plan and above and secure a free domain for 1 whole year. Now, back to the episode.
So let me assume that my goal is only one, which is for retirement. Like you said,
Sure.
there's no goal. I need to accumulate as much wealth as possible and create generational wealth.
Sure.
So if that is the mindset, how do you look at investing?
So great. Now, what happens is people talk a lot about index investing. That, okay, I want to make money in 20 years. Let me put money in some indexes. Let's say Nifty 50, Nifty 500, Nifty 2, small cap, mid cap. I'll give you a very interesting data point. So first data point is that if you look at the which index has performed the best over the last 20 years. Nifty 500, if I take that as a composite index because it constitutes 100 large cap, 150 mid cap and 250 small cap, has never topped the chart.
Nifty 500 has never topped.
Never topped the chart.
Okay.
So what has topped the chart? The topper of the chart has either been a momentum fund or a value fund or a quality fund or an alpha fund or a low volatility fund. And majority of the times, your momentum fund and value fund are the toppers. So if you look at top two,
Right.
either 70 to 80% chances that you will have a momentum or a value.
Correct.
So if you want to build wealth and you want to beat the markets, I would suggest instead of focusing on only index funds, start focusing on factor funds. So I'll give you an example. How has been the last 1 month of Indian markets? What would you suggest?
Indian
Last 1
market,
month of Nifty 50, how has it been?
It's been mostly sideways only and
Sideways.
there.
Yeah. If you look at right now, Nifty 500 Value 50 Index Fund, which comes at an expense ratio of
It would
0.18%,
have gone up.
10%
Yeah.
in a month.
Yeah.
Okay. So when you have value-based investing and when you have factor-based investing, some or the other factor would be performing in any of the markets. In a sideways market, value would be performing. In a very big crash, quality would be performing. Low volatility would be performing. In a market which trends up, momentum and alpha would be performing.
Right.
So if you are able to create a basket of these funds, the possibility of you getting more returns than the benchmark index improves. So I would suggest that if you are looking at creating a long-term wealth, start looking at momentum and factor investing, which could be any of a mix of these 5 particular factors.
Okay. But there are also specific mutual funds which follow some of these strategies,
Yes.
right? Like for example, Axis AMC typically follows more of quality and value oriented, whereas an Invesco could be more momentum and growth oriented. These AMCs have their own thesis.
True.
Depending on who the CIO is.
True.
Right. So do you look at that also like, okay, this fund manager usually follows this kind of strategy, so I'll go after this fund manager. So how do you think at that?
I think that's not a winnable game for a retail investor.
Okay.
Because see, somebody who's doing a job who's not able to track it, very firmly, I think it's better that you depend on these indexes which have been created to support factor investing.
Okay.
So let's say there's a Axis CIO and he shifts his job and you don't come to know about it. And suddenly the new guy comes, he's no more quality, he's a low volatility guy. So this is very difficult to keep on tracking for people. Better, and they come at a higher expense ratio. They will come at 0.8%, 0.9%, such kind of expense ratios, where these indexes you will be able to get at 0.15, 0.2. So that is a very big thing. And if you play them in ETFs, you get it at 0.1%, 0.05%, so on and so forth. So you can play ETFs also because they're indexes. You can't play an ETF of a actively managed fund. So Parag Parikh Flexi Cap, I can't have an ETF of that.
Correct. So for the audience who don't understand what ETF is, can you simplify it?
So ETFs basically is like MFs but traded on the exchange.
Right.
So on mutual funds, you see NAV updated only once a day, which is at 11 p.m. And you can, if you purchase before 2 p.m., you will get the same day NAV. If you purchase after 2 p.m., you will get the next day NAV. So it's very difficult to dynamically invest in a mutual fund.
Correct.
So if you want to dynamically or time the market, so for example, 4th of June 2024, markets crashed by 6%. You want to take that opportunity of a crash and want to invest at that time, the best way to invest is ETF.
Because you'll get that day ka price.
Yes, that moment ka price, also you can get. So, and certain instruments like gold and silver, always better to invest through ETFs because you get tax advantage, better tax treatments there.
Okay. So if I look at an ETF, there is also the concept of NAV and INAV, right? So sometimes because there is so much of demand for a particular ETF, you might be overpaying than its true value, which we saw in gold and silver. Because there is so much of rally, the INAV value is actually lower than the actual NAV, the real NAV.
Right.
Which means that I'm overpaying for gold and overpaying for silver. Don't you face those kind of risks when you're investing in ETFs instead of mutual funds?
So 2 solutions to that. One, never invest in ETFs only for a shorter time of 3 months, 6 months, 12 months. Look at it for at least 5 years, 7 years, 8 years. Because then this gap kind of normalizes and evens out. Second solution is always try to have, because it's index and there will be multiple ETFs, try to have 2 AMCs ETF. So if I'm doing silver, I do silver Bs, I do silver Ks. So at any time, किसी ना किसी का NAV INAV से ऊपर चल रहा होगा, कम चल रहा होगा, gap would be more, gap would be less. So I would normalize this because again, I don't have control over this. So when I don't have control over this, I would diversify the AMC. I would have 2 AMCs on this and I would go long term. So over long term, these kind of things kind of normalizes. So that's my ETF strategy.
would it be possible to have a glimpse of your portfolio?
Absolutely.
Can we see it? 10
Sure.
crore portfolio.
Okay.
Perfect. Guys, the laptop is out. Let's see the portfolio.
So this is my latest MF investments. You can see it's 6 crore 12 lakhs.
Okay.
Okay. This is my ETF investments. That's 2 crore 9 lakh. Okay. So so mutual fund is my dal chawal, it's like it goes on like my dal chawal.
Is this the green number below, is it showing the today ka?
Yeah, today ka profit.
Okay.
So that was today's profit. So you can see this is the set of mutual funds I have. A lot of those mutual funds, as I said, are legacy mutual funds. So you can see this one. So we have 120% profit in this, which is an SIP. Over a span of, let's say, 10-ish years, 9 to 10 years. Again, 150%, 130%.
10-ish year mein 120% return is basically slightly more than double.
Yeah, slightly more than double, but this is SIP return.
Okay.
Because it's not, agar lump sum dekhenge, to my initial value of this fund, I still remember, was 18 rupees.
Achha.
So this is 4x in 10 years.
Okay.
So which is, you can say, give or take 18%, 15-16% CAGR.
Got it.
So these kind of all these things, and then day change is that particular day's change. So these are some funds which I have with me. Few of them were experimental funds, few of them are legacy funds. We do an SIP in almost 5 to 6 funds today.
Okay.
And my total SIP is in the range of 5 to 6 lakh rupees.
And what is your market cap allocation in mutual funds?
So this is, so you look at this, I'm a very heavily aggressive investor, because for me, people ask me, what is my exit plan? I say death. So I don't want to exit. This goes to my son.
Right.
So small cap is 32%, value orientation. So this is the style of investing, value investing. It's 20%. Then one sector, because I always believe if a country has to grow, the banking sector has to grow.
Yeah.
So this is one sectoral fund which I have taken a bet on. Though I tell people not to do that, not to play sectoral. But yeah, this one sector I have taken a bet on. Large and mid cap is 15%. Flexi cap is 5%. Multi cap is 4%. Mid cap is 3%. So I'm basically a very, you can say, very aggressive investor when it comes to investing. It's 32% here.
Got it.
So this is my debt is very less because I have 1 crore of government securities.
Okay.
So that acts as my debt cushion, which is not here.
What is government securities for you?
So basically, Reserve Bank of India issues government securities.
So what have you invested in?
These are the securities which are going to mature in 2034, 2035, 2036.
Okay.
They give you a coupon of anywhere between 7 to 9%.
So you invested in that.
Invested in them. So that acts as my debt portfolio.
That's 1 crore. So 10% of your money is in
debt right now. So that gives a good cushion to me. Then you can have, but this debt would be only because of hybrid bit. So hybrid ki wajah se kuch debt aa gaya hoga idhar. But rest it is majorly your small cap. Small cap is the play I give.
So what is this graph? That's the performance.
That's the performance of the portfolios.
Okay.
So the IRR right now is 12.36. It's a blended IRR because we have sold, purchased, so on and so forth.
Got it.
This is my ETF investment. A lot of this money we had moved also. Agar main wo move na karta, to shayad my MF portfolio would have been higher.
Okay.
But I strategically shifted to ETFs.
Sure.
Because I wanted to capture the dips. I saw the market is flat now. This will give me an opportunity to buy a lot.
Yeah.
So this is my ETF portfolio at 2 crore rupees. We have 18 ETFs. So basically, when you invest in ETFs, it is index ETFs, gold and silver. That's what, and international. So here my exposure is majorly international, you would see. A very large amount of international investing we have done here. Then we have large cap, which is through Nifty 50, Nifty Next 50. We have PSU, which is through CPSE ETF. We have small cap again, mid cap here. Yeah. And I've done an EV sector bet through the ETF because I believe in
there is an ETF for the EV sector.
Yes. I will show all the names also.
Yeah.
And then there's Flexi Cap, which would be around all the different caps. I invested heavily in silver when silver was at 80,000 rupees.
Yeah.
So every time silver used to dip, I used to purchase.
Nice.
So suddenly my best, the top holding has become Nippon India Silver ETF. Though when I invested, it was not so.
Right.
But now it is because of the 4x, 3x returns it has given me. Then you have gold ETF, which I have invested. You have CPSE, which is the Central Public Sector Enterprises.
Sure.
You have HDFC SML 250, which is small cap 250. This is index. Then you have Mahak Tech, which is China index. Allows me to invest in China top 100 companies. Mon 100. This is
so these are Indian AMCs creating ETFs for you to invest outside India.
Yes. So that, but they have a cap of $7 billion, so they are not very liquid.
Right.
So you may not find buyers and sellers much here now. So buyers are there, but sellers are not there. Sometimes if I want to buy, I still don't get sellers here.
Okay.
Then you have, this is that EV which I was while I was talking about.
Which AMC offers?
Which is Grow.
Grow offers.
Grow EV. So
and
it's
the
basically
Chinese one, which?
this is Mirai Asset.
Mirai Asset.
Mirai Asset.
Okay.
So Grow EV, basically there is an index of EV. So Grow basically has an ETF over that index.
So it has like companies like Ather Energy and all.
Yes, that all EV companies would be here in this.
Got it.
Then this is Nifty Next 50. This is Mafang. This is 10 top technology stocks of US.
Again, Mirai is
Mirai Asset.
offering.
Mirai Asset. Momentum 50. So this is a style of investing. So this is Nifty 500 Momentum 50 ETF.
Got it.
So this is by Motilal Oswal. Then you have Nifty Bs.
So one question here. So when you're investing outside India, what is the expense ratio of these funds? Let's take the example of the FANG, which is the the big tech companies.
Expense ratio is 0.65%.
Oh,
yeah,
nice.
So fairly cheap.
Fairly cheap.
Fairly cheap. You can get an access to
perfect
international markets through this.
Awesome. So basically, your 10 crore is divided around 8 crores into 6.5 crores to mutual funds, and the rest is in ETFs.
Rest is in ETFs, and 40 lakh rupees is in stocks. Now, the stocks basically is something which I keep on experimenting different screeners.
Okay.
So I will pick up a screener, let's say Peter Lynch screener, and I would see how would Peter Lynch invest. I would do the back test on how those performance would have been. So let me experiment. There.
Okay.
So that kind of things I do, but that's only 40 lakh rupees. So that's 4% of my total portfolio. So I would suggest that
essentially 90% of your money is in pure equity.
Yeah. Pure.
Right, and 10% is in debt.
Yeah. And inside pure equity, very high risk into small caps and mid caps.
Okay. And do you know what is your XIRR over the last 15 years that you've
around about 12.5 to 13%.
12.5-13% is your XIRR.
Yes.
Got it. So when you are picking these index funds, so I'm feeling like you are eventually going to move more and more money from mutual funds to ETFs. That's the way you're looking at it, because you are more and more actively rebalancing your portfolio. So for a common man, when they listen to this, what should be the initial strategy when I invest in ETFs? Because you mentioned so many different factors are there. There's momentum, value, low vol, all of these, quality and all of these things, right? So how do I get started on this? Like, how do I know which factor is right for which period of time?
See, that again, nobody can make a guess, because it's always, it's very difficult to predict what is on the right. In the future, what is going to happen, the next candle, the next year, we can't predict those things.
So like right now, momentum is not working.
Absolutely.
Right. So my question is, if I can make some predictions that, okay, this factor is not going to work for this year, maybe I'll focus on these factors. Is there something of a framework that I can figure out here, or you follow a different approach where I'll invest in everything and see?
Absolutely. I follow diversification.
Okay.
See, because as I said, I don't have that much time to keep on looking at the markets.
Okay.
So what I do is I will diversify and I'll create a thali out of it. So instead of saying that, my body is going to like only this kind of food, it's better to experiment with everything. But in proportions, obviously in proportions.
So what is that proportion?
So the proportion is, I would say, if you're looking at ETF investing gives you an access to gold, silver, international. You create a thali, you say 60 to 70%, I would stick to Indian equity. Now, Indian equity, you could go to indexes, which could be as simple as Nifty 50, Nifty Next 50, mid cap, small cap. Or you can say that, okay, I don't want to go for these indexes because I'm long term. I will go for one momentum, one value, and one quality. That's it. I think that if you can do 20-20-20 each,
okay,
so you are fairly set.
20-20-20 each.
20-20-20 each. One momentum side, one value side, one quality. You're done, almost set. Low volatility only protects you against very big crashes. Like something like 2008. 2008, low volatility was the best performer. That means it fell the least.
Right.
So these are the three which you can allocate in your domestic investing. Now comes the remaining 40%. Remaining 40%, 20% go for gold, silver, 15% gold, 5% silver.
Okay.
See, don't get into FOMO of silver. Silver is a highly volatile asset. मैं उसको बदमाश बच्चा कहता हूँ. You can't have the entire portfolio at बदमाश बच्चा.
Yeah.
5% is okay. You can take that volatility. I think you'll be able to take it for the shorter period also. Gold reserve, आपका currency reserve है, natural hedge है. So again, good to have gold in your portfolio. The last 20%, you can go international and you can go a bit of small cap index in terms of HDFC SML 250. So that's a specific small cap index, which is the last 250 companies of our country in the sense, that is a specific index from company number 251 to company number 500. Okay. So that's the small cap representative. So you can put 5% of that. The remaining 15% you can invest internationally, which could be Mahak Tech, which could be Mafang, which could be Motilal Oswal Nasdaq 100. So this, if you are able to...
How do you decide between the different countries? There is US, China, Taiwan, Brazil. So how do you decide which countries to pick and how to divide your money?
See, it's very difficult to access every country from India. So majorly 2 countries only you can access from India. Japan bhi kar sakte ho, but Japan ke liye mutual fund hai. So I don't think so there's any ETF for Japan. The ETF is only for US and China. There's no ETF for anything else. Second, if you see historically, US large caps have always done well. So if you take a bet on S&P 500 or you take a bet on Nasdaq 100, you probably over a longer span of time, 15 to 20 years, you'll end up making better returns. Third is the benefit of currency. Obviously, INR depreciates 3 to 4% against dollar over, let's say, a time frame of 10 to 15 years.
So instead of investing in the ETF route for outside India, there are also apps which lets you directly invest in these international stocks and in the international ETFs also.
Yep.
Like you mentioned about FANG. So FANG, you are investing in a domestic fund ETF. Why have you not considered investing directly in an international ETF which invests in FANG? Like, what is the reason?
यहाँ ना बहुत बड़ा issue है. People don't. This is half knowledge. This is half which I'll give today.
Yes.
Half knowledge is LRS, Liberalized Remittance Scheme. I can invest through India, go out. I can use iShares. I can open a broker account in India. And I can use iShares, which is BlackRock ka ETF. And I can either invest directly in US stocks like Tesla and all those guys. Or I can invest in ETFs. Now, the ETFs or stocks which are in US are in situ ETFs and in situ stocks. Iska matlab kya hai? They are domiciled in US. The rule says, if your stock or ETF is domiciled in US and you are an investor who's sitting outside US and investing there, in that case, you will have to pay estate tax on holdings above $60,000.
To who?
To US.
Oh.
Yeah. Second, there will be a dividend tax of 30%. 30% dividend tax would be there. So whenever a dividend is issued, I will come to estate tax again.
Yeah.
I'll tell you the problem statements first. So one is estate tax. Second is you will have to pay dividend tax.
Okay.
So dividend taxes, whatever dividends are issued, 30% will be withheld by the US government.
Okay.
If you are the treaty with India is at 25%. 30% is standard, but if you have a treaty with the US, then it reduces. For UK, it's 15%. So if you're in UK, you're investing in US, it will be 15% will be deducted.
Okay.
If you're in India, you're investing in US, 25% will be deducted.
Okay.
ठीक है, तो ये दूसरा आपका problem statement है. तीसरा is great because they don't charge any capital gains. So when that money comes to India, it will be non-capital gains taxed in US.
Yeah.
And in India, you will be paying 12.5%.
Correct.
जो standard है. But that is above 2 years, not below, above 1 year. That now I come to the estate tax issue. The estate tax issue is, let's say, an investor has invested $100,000 in US. And suddenly something happens to that person, he's no more. Extreme case, but it is a case.
Yeah.
The balance between $60,000 and $100,000 will be taxed anywhere between 18 to 40% depending upon the slab. And that's the estate tax problem of US. So whenever you are investing from India to US, you have to factor for this problem that if something goes wrong with you, if you know more, your inheritance will be taxed in that range. And I'm not talking about profit. I'm talking about the value of investment.
Value only will be taxed.
Yes. So let's say you invested 100,000 and that got reduced to 90,000 because of fluctuations and something had to happen to that person who was an investor. He will end up paying 18 to 40% tax, whatever the slab is, on the incremental $30,000.
Before it goes on to his son or daughter.
Before it goes on to the inheritance. Yeah, but if he's alive and he takes out the money, then it's okay. Then you're taxed at 0% cap gains. Now, there is a way out to this. And that way out is you have to look at ETFs which are housed in Luxembourg and Ireland. And these are called UCITS funds. So whenever you are investing in abroad, whenever you're investing in US, don't look at standard ETFs and stocks. Look at UCITS ETFs. There are 1,300 plus UCITS ETFs of iShares, which is BlackRock. So you can invest in them. The second benefit with UCITS is that they have 15%. They don't have estate tax. So there's no estate tax problem. Second benefit is they have a dividend distribution tax of 15%. And that also is accumulated. So that means when US deducts dividend, it will deduct only 15% and the balance which goes in goes again and gets reinvested in the ETF. तो वो आपके capital gains में जुड़ रहा है और capital gains will be taxed after 2 years at 12.5%. So international investing is fairly risky. Second, you have to pay TCS in India. Anything above 10 lakhs you invest, you have to pay 20% as tax collected at source. It's not frictionless. That's what I want to put first of all. So if anyone is looking at a small investment let's say if somebody's looking $100 SIP, $50 SIP, then I think direct stocks in US or ETFs of US is okay, because to reach $60,000 it may take some time. But if you're planning to invest a larger chunk, you want to invest $50,000, $100,000, please be mindful of these things. And due to this, I generally stay out of this, because there's so many compliance issues. Then you have to report it in your FA, foreign asset holdings. If you forget to report in your foreign asset holdings, there is compliance issue in India. Recently also, we have seen that how strict government is on this thing.
Right.
So due to all these things, I generally avoid.
So the way you are investing in US ETFs is through, you mentioned it's through Mirai Asset.
Mirai Assets.
They have created an ETF in India only for investing in the FANG.
Absolutely.
What is the taxation that you have to pay for these kind of ETFs?
12.5%.
Same 12.5%
Yeah, absolutely.
tax.
It's Indian equity for me.
So there is no difference in terms of savings or cost or returns or taxation. No difference at all.
difference at all.
It's the same thing.
Absolutely same. 1 year ke niche, it will be taxed at 20%. 1 year ke upar, it will be taxed at 12.5%.
And then your, what are you saying? The expense ratio is also
0.6, 0.8, 0.9. But if they are investing in ETFs, they may further pay 0.4, 0.3, 0.4%. iShares ETFs, if you look at and do your research, your normal QQQ or the ones which are listed NASDAQ 100 and S&P 500, very cheap ones, 25 bips, 30 bips, 40 bips.
So 25 bips would be like
0.25%, 0.3%.
Yours is 0.7%.
0.65% here, and let's say add another 0.4% there if they are investing in that ETF.
Okay, they are like a fund of funds.
Yeah. So if they are fund of fund, you will pay additional 0.4% or 0.5%.
So yours is mostly will be fund of
fund. Of fund, yeah.
So you pay 0.7 to Mirai.
I think FANG Plus is not fund of fund. The others are fund of fund.
Why is FANG Plus not?
Because they directly invest on those 10 stocks.
Okay. So yours is 0.7%.
Yeah, 0.7%.
Right? Versus you directly going there, it might be 0.25 also.
0.3, 0.4% also. But then you have these TCS as a cash flow issue.
Yeah. So there is a TCS issue for which you have to wait till you get their money back to adjust with your income tax.
True.
And the second more important thing is the estate tax.
Estate tax and the dividend withholding tax. Yes.
Okay. And what is your plan? Right now you're like a HNI, 10 crore net worth, living in Delhi. Do you own a house today?
No.
You don't own a house?
Yeah. I listened to Sharan one day, so I decided not to invest.
So where do you stay? In Delhi? You stay
in Delhi, I stay in rented house. Here, my father owns a house, but yeah.
Where? In Mumbai?
Mumbai. Yeah.
And in Delhi, where is your rented house?
It's in South Delhi.
South Delhi.
South Delhi.
Like, what is the rent you're paying?
I'm paying 75,000 rupees a month.
It's like a 2-bedroom apartment.
3-bedroom apartment.
75,000, 3-bedroom apartment.
3-bedroom apartment, 1,800 square feet. East of Kailash, good location, south. Delhi is a bit cheaper than Bombay when it comes to rents.
Much cheaper.
Yeah, because South Bombay, I don't think so. You'll get a 3-bedroom below 2 lakhs, 2.5 lakhs.
Yeah. Trump Tower will be 2.7 lakhs.
2.75 lakhs.
Yeah.
So.
All right. So
and the apartment value, the value of that apartment where I'm staying is 5 crores.
5 crore.
Yeah.
So you pay 70,000.
75,000.
75,000.
Yeah.
So what? 9 lakhs annual rent.
9 lakhs annual rent. 1.8%.
1.8%. So very low rental yields in Delhi, even lower than Mumbai.
Yes.
What is your monthly expense?
My monthly expenses may not be if I add rent.
But I see a lot of gold, ring, chain and all over here.
That's astrology maybe, but yeah. These are all assets.
Assets, yeah.
These are also assets. I think not more than 2.5 to 3 lakh rupees a month.
Per month.
Yeah.
And how do you spend your money?
75,000 is rent. Rest is, maintenance, vehicle, your petrol, other charges, traveling, those kind of things.
Got it.
Shopping.
Got it.
I'm very frugal, reasonably frugal.
Are you planning to live in India forever? Like, what's your plan?
See, I want to evaluate the opportunity of seeing how can I invest more internationally, because India, there is a lot of friction to invest internationally.
What is the friction? The TCS?
These are all the rules which I told you.
No, but in your ETF also, there is friction, right, for you? Because of the restriction of $7 billion.
Of $7 billion. That I can't go beyond. And second, I can't access markets. Na? मतलब अगर आज मैं India में तो I am not able to access larger markets directly.
Correct.
But if you go out, let's say a jurisdiction like UAE, you get more chances to invest abroad.
So you're planning to go to Dubai?
Yes.
And Dubai, will you buy a house?
There the rental yields are good.
Yeah, because real estate is not the same everywhere.
Yes.
It might be bad in India, but it might be good in Dubai.
See,
so how do you look at it? Because you have real estate background.
Yeah, I've been, I think once you have a real estate background in India, it becomes a very big problem. You see the kind of things which are
the funny thing is that you've been in real estate your whole life and didn't buy a house.
Yes.
Right.
वो क्या ना हलवाई अपने मिठाई खुद नहीं खाता. So, yeah, but there the thing is that you make 6 to 7% rental yields. That's point number one. 2 to 3% currency benefit. And let's say today the
What is
thing-
that? Can you elaborate? 2-3% currency benefit?
So let's say 2 years back, dollar was 82, 83 rupees. Today it's 91 rupees. So if you take that depreciation into
And why is that important in Dubai? Because Dubai is dirhams.
Dubai's dirhams, it's pegged to
The dollar.
US dollars at 3.66.
Correct.
So anytime US goes down, dollar goes up, down,
Dirham
will be adjusted accordingly. So that benefit you get because you have invested in dirhams.
Yeah.
Third benefit you get is, even people are saying that, let's say right now it's a boom, it's 30% per year. I'm not factoring all these things. I'm saying 10 years double is a very reasonable expectation
Yeah.
from real estate. So 10 years double is a CAGR of 7%.
Correct.
So if I'm making 7% rental yield, 2 to 3% currency, let's say 9% in all,
No, 7%
Rental yield.
7% capital gains also.
capital gains, and 2% of currency depreciation.
Okay.
So I'm making almost 16% returns on this particular property.
Right.
And the best part is I get a mortgage at 3.54%.
Oh.
So my rental yield is greater than my mortgage,
Mortgage means the home loan.
the home loan, the EMI. So every time my rental will be greater than my EMI.
But the home loan rates are lower for residents over there. No?
Yes.
For foreign people, they still charge 5-6%.
So even if it's 5 to 6%, it's okay. The personal loans are available at 6%. So if you are able to borrow personally also, and you're able to identify a property which gives you 7 to 8%, I think it's a good number. At least you're able to own the property after a certain time. And you don't have a cash flow. So in India, if you do this, I had to buy this 5 crore house. I had to pay a 4 lakh rupee EMI, assuming 100% is debt. Okay. So 75,000 is my inflow, 4 lakh is my outflow. How do I match it?
Correct.
But in UAE, the same 4 lakh rupee EMI, I will be making 4 lakh 50,000 rupees rent. So at least excess 50,000 would be there with me, which could be, I can knock off the loan earlier. So this kind of mathematics can happen only when your rental yields are exceeding your EMI numbers.
So you're planning to buy now? in
Let's
Dubai.
see. Maybe 6 months down the line after I figure out what I'm going to do there.
So have you not explored any other asset classes beyond equity, debt, gold, and real estate? Anything else that
I've done a bit of crypto,
What have you
but
done?
that's only Bitcoin and Ethereum. Created a small portfolio in that.
How's it doing now?
Very bad. It's all. But you know what happened when it went down? I doubled down because
Right.
I realized that it's 20% down. Let me add some more, and that has given me a bit of benefit now in the recent, uptrend. Yeah.
Yes.
So it has given me a bit of benefit, but it's okay. Again, see, I always understand that my investment is never for a 6-month, 12-month period. I don't look at investments that way. I can't think below 5 years. So if somebody asks me what is your plan in Dubai, well, I'll figure out because I have 3 to 5 years there. I'm going ready for 3 to 5 years thick. So I think you need that much time to nurture any investment. No equity investment or highly volatile investment can nurture before that.
And what about derivatives? Do you do some FNO?
I do FNO, but not much. Very, very restrictive.
Okay.
Very restrictive.
But you do that like just for fun.
Just for fun, and I leverage my ETFs on that. You don't
Can
need
you
extra
explain
capital.
that? Can you explain that?
So, for example, I have 2 crores worth of ETF.
Okay.
I have 1 crore worth of government bonds.
Okay.
I can keep it and get capital to play FNO, intraday FNO.
Can you go deeper? Like what interest you have to pay for?
Okay, yeah, very good question. So, isko lete hain. Let's say I have 1 crore ETF, 1 crore government bonds.
Okay.
I will pledge both of them. I don't have to pay any interest.
No interest.
Zero interest.
Okay.
Zero interest.
और आपको कितना पैसे मिलेगा?
Iska almost 85 to 90%.
Really?
Yeah.
If you give 3 crore, you will get 2.5 crores free money.
Free capital. Okay.
Wow.
To play overnight options. So what happens is if I didn't have debt and I only pledge equity ETFs, then I can play only intraday. I have to close my position intraday.
Okay.
Okay. If I carry that position overnight, I have to pay interest.
How much?
That's at I think 1.5% a month.
Okay.
Right? So
Okay.
that's 18% per annum. But if I add this
Debt.
at
Okay.
50-50,
Okay.
okay, so in that case, I don't have to pay any interest.
For how long? You have to
Anytime, any amount.
No,
I can hold the
for-
position for 1 year, 3 months, 2 months, 1 month, 15 days, 6 days, anything.
1 year also you can hold it.
Hypothetically, you don't get that kind of contracts in India.
Yeah,
Let's
monthly.
say,
na,
even
monthly
if I'm doing, saying monthly contracts, I can hold till the month end.
Wow.
So if I'm able to find a high probability position, which can yield me even 1%, 2% in a month, I will make that's a free money for me.
So can you give one such tactic that you use in FNO?
So I basically do iron condor on ultra large cap stocks. So what is that? I'll tell you. Let's say Reliance is today at 1400. Let's give or take an example. Now within a month, what do you think will be the maximum movement upside, maximum movement downside?
I have to guess.
Guess. Yeah.
I think
A share like Reliance, not a mid-cap share.
Yeah. I think maybe 1 to 2%.
Okay. How about 10% up, 10% down? Reasonable safety?
Yeah.
So what we'll do is we will sell a 1540 call and we'll sell a 1260 put.
Okay.
So what we have done is between these two numbers, anywhere between these two numbers, if Reliance closes within this month, I will make money.
Can you explain? Go deeper.
So what happens is options is basically a right. Option is gives you a right to buy or right to sell.
Correct.
So a call option is right to buy. So there's a guy who's saying that I am ready to buy the right of buy at 1560. Sorry, 1540. At 1540. Okay, 1540
Current
is the
price is 1400.
So I feel I am somebody who feels this stock within a month will go to 1540 or above.
You're saying.
No, the buyer is saying.
Buyer is
the buyer is saying. Okay.
You know it won't happen.
I say it may happen. Probability is low.
Probability is low.
Probabilities. It may happen. कुछ भी हो सकता है. But the probability is low. ठीक है.
So you will sell
I will sell that bet to him. It's a bet.
And you collect the premium.
I'll collect his premium. He'll give me 6 rupees per share or 5 rupees per share.
तो वो एक 1% का होगा.
वो होगा, मैं आपको बताता हूँ. Similarly, on the other side, there's another guy
हाँ.
who's saying this month will be the worst month of Reliance. It will fall below 1260.
Okay.
I'm selling that bet to him.
Okay.
He's also giving me premium.
Okay.
I'm collecting both premiums and I'm sitting pretty.
Okay.
Now, I just have to wait out the time.
Hmm.
If between this time, the stock ends up between these two numbers, I end up making my entire premium. And if you're on one side, if sometimes thoda ho gaya, to you have a stop loss which you can execute.
Can you give an example of what is the premium that you can collect in this example?
So generally when you lock both the sides, you get a benefit of hedge because क्या हुआ कि आपने इस side का भी बेचा, इस side का भी बेचा. So in that case, the market says, the exchange says that you don't have to pay full margins of both sides, pay full margin of one side, half margin of the other side.
Okay.
So that means my margin requirement will be, let's say, ₹1,00,000 per lot. Now in Reliance, one lot is 500 shares. And I say, this guy has given me 5 rupees. This guy has given me 5 rupees. So 5 plus 5 is 10. 500 into 10 is 5,000. So on a ₹1,00,000 investment or ₹1,20,000 investment, I can make anywhere between 4,000 to 5,000 rupees.
So lakh आपको margin रखना है.
Lakh I have to keep as margin, but I don't have to keep that.
हाँ.
Because I have an ETF and
Okay. तो वो margin उधर से.
वो margin उधर से आ गया.
हाँ.
ठीक है.
This is where you're getting that free capital.
This is free money. This is that free capital and उसके ऊपर का ये free margin है.
Okay. So you're getting what is the example here? 5,000 rupees.
Let's say 5,000 rupees.
So 5%.
5% हो गया. 5 होगा, 4 होगा, 3 होगा. Generally it ranges between 2 to 5% depending upon volatility of the month, so on and so on. There are many other factors.
That is how much you can make per month.
Yes. Free, but yeah, there is probability. Generally, this event is 80% probable. So 1 or 2 months in a year, there will be months where Donald Trump will come up with something. TCS will fall 6%. Something will happen, you know.
Right.
So you have to factor for these things, and
So
that's why you diversify some stocks.
So with how much percentage of your capital do you do this kind of strategy?
20-30%.
20-30% of your money is in this.
Yeah.
This kind of stuff.
Let's say I have 3 crores worth of debt plus equity.
Huh.
So you have to match 50-50. So 1 crore of ETF goes away. 2 crores तो मुझे मिल ही जाएगा ना. So 2 crores margin I can get.
So 2 crores full you deploy in this.
No. Deploy 2 crores full. That's obviously very risky for us.
So
but 40 lakhs will deploy, 30 lakhs will deploy. That's our choice.
So around 5% of your.
Yeah.
So around 5% of your money you do these derivative things.
Yes, not much.
But this is just for fun.
This is just for fun.
If it works, it works. If it doesn't work, it's not going to change.
See, we make losses. ऐसा नहीं है we don't make losses. But we have capped those losses at 10% of the capital deployed. So if I deploy 40 lakhs, I will cap it at 4 lakh rupees. So ठीक है, this is play money for me. It just works for me.
Interesting.
But we don't do one-sided directional bets. Those things we don't do because that is very active. And I'm not an active trader.
Perfect. So Sanjay, now let me go to the rapid fire round. I'm going to ask you quick questions and I want quick answers. Question number 1. One word to describe the markets in 2026.
Uncertain.
India's IPO boom in 2026. Opportunity or overheating?
Super overheated.
Most undervalued sector right now?
Most undervalued sector right now? Not IT. IT structural breakdown.
Which region or market looks most undervalued or mispriced this year?
Which region or market looks
in terms of geography? Which country? Which?
I think Southeast Asia
is most undervalued.
Yeah.
Is this a year for stock picking or passive investing?
I always believe stock picking. I'm totally against it. So I always am passive investing.
Should investors add more gold at current levels?
Don't go beyond 15% of your portfolio, not required.
AI, boon or bubble?
Boon.
What's the biggest blind spot for investors today?
Not knowing their goals.
And what's the single biggest risk for markets in 2026?
Donald Trump pressing the red button.
And he's only finished 1 year.
Yeah.
All right, Mr. Sanjay, thank you so much
Thanks,
for coming here and being so candid with your entire financial journey.
So Sharan, thank you so much first of all. And you have actually kind of pioneered making finance so entertaining and so valuable, And I think a lot of people have drawn a lot of inspiration, including me, for my content journey. Somewhere around 2 years back, before I started my content journey and I became financially free, I was teaching my son about money management. So I enrolled for your masterclass.
Okay.
And me and my son, who was 10 at that time, now he's about to turn 12. And we sat down and saw your episode.
Okay.
And after that, I thought that I should teach my son about money management properly. So I took up a board and I started teaching him. And I wrote a post around it on LinkedIn.
Right.
And I tagged you.
I remember.
And you had replied
Yes.
very generously.
So this is before you started creating content?
Yes, this was before I started creating content.
Wow.
So I think it must have popped on your feed or something.
Right.
Because I tagged you. But so thank you so much for that.
Wow. And guys, if you've been watching till this long, I'm sure it has been a very, very inspiring story for you to hear how from starting with just 32,000 rupees, is that
35.
right? 35,000 rupees monthly salary 15 years back. Fast forward to today, he is retired and sitting on 10 crores. I think that is the story, and that is, the biggest proof that, anybody can do it. You don't have to be born rich. You just have to work at it, understand numbers, and be patient. If there is any questions that you felt like I did not ask, please drop them down in the comment section below. And please share your future guest recommendations so that I can bring them for you on the next episode. On that note, I'll see you in the next one.